Hello, everyone. Welcome to the Trading Titans podcast. I'm here with my friend Tom King. I'm Uncle Tony, and hey, Tom, can't wait to talk to you again. It's been an unbelievable time. So, what have you been up to?
Yeah, it's been a great time in the market. Markets are doing great. Accounts are doing great. I've taken a little bit of time off. The great thing about I think the way we trade is you don't have to sit in front of a screen glued to it for 8 hours a day. You can get out and play some golf. I took some time, went up to Lake Tahoe and uh, vacation, did some activities up there. So it's been fun. So
Are you telling me there's more to life than just trading?
yeah, believe it or not, there's a little bit more to life than trading. So we want to you know, at least from my standpoint, the days of just sitting there and being glued to my screen, even though it's what I enjoy doing and I like being in front of it and
Right.
interacting with our members on camera, but I also like to just get away, go play some golf if I want to, go vacation, travel a bit. So it's all good.
And what did you do over your vacation? What sort of activities do you do normally when you relax?
It all depends. This was more of an active vacation in Tahoe, so we took the boat out and did some boating one day. We rented some kayaks, did some kayaking. We hiked up some of the mountains there. We did some mountain biking, some biking around. So it was a little bit more active of a vacation. Now I'm ready for a vacation for my vacation. So,
I
so the
think
next one is back to Florida to the condo and just kind of sitting around the pool and the beach and hanging out. So
that's great. I think the last time I exercised, it was my senior year in high school. So, my God,
it's all fun.
that's great. No, while you were vacationing, I was working my bought off to launch this new company, pickleball company that I have, and I've been working like a teenager, 17, 18 hours a day, plus trading, plus taking care of the family, the dog, and keeping up with the market. So oh, so I I wasn't having a lot of free time for myself.
No,
So
the funny thing, Tim, you mentioned that is, I've owned my own business and company now about 8 years or so, but everybody thinks that's great to not work for somebody else and they want to start their own business because they think they're going to have all of this free time and make all of this money. Well, when you move from a 9 to 5 to owning your own business, it becomes a 5 to 9.
it does,
So you go from 9 to 5 to 5 to 9. Uh, so the freedom isn't always there, and you have responsibilities, and you have
of
people,
course,
and
of course.
but the
It's
rewards
all
are there,
good.
and it's great. It's great to having your own company. So
Right now I have 11 active companies right now, which is nuts so. And the pickleball company was actually my 17th startup that I've done. And so it's fun. It's fun, and it's also a good example for our kids to see that you can work hard and make money, because I'm a true believer that life is so expensive right now. You need several sources of income
mhm.
to survive. The trading can be a source of income, maybe other investments that you have, like real estate or something else, but life is so expensive. I don't think a family can survive with just one source of income.
No,
you
it's
know
it, it's tough. I'm totally with you. I remember many years ago, Robert Allen wrote a book called "Multiple Streams of Income," and it was like a book I read early on, and a lot of stuff hit home. That's why I started my own company. I have a couple different companies that I've started, like you. I'm not quite the serial entrepreneur that you are, but I do have a couple of my own companies and a couple side ventures and things like that I do. And trading is certainly a source of income, but you certainly want other sources of income. And a lot of people tell me it's funny. So just staying on this for a second,
yeah.
in our membership service that we have, people are always asking about how do we start my own trading business, or hey, I want to leave my 9 to 5 and just trade for a living. And trading for a living is not all it's cracked up to be,
No, no,
for
no.
number one. But number two, I'm like, why would you give up your day job income and
Exactly.
replace it with another? All you did was replaced it with another income. Like you want both,
Ex-
at
I,
least
I,
for now.
that's the truest thing I've ever heard. And now that you talked on that subject, one of the questions I get the most is, how much money do I need to in my trading account so I can live off of my trading? And the answer I give them is it's an answer that maybe they're not going to be happy, because number one is, what is your expenses, right? We have to analyze that. Let's say
Mhm.
you're a regular family and your expenses are, geez, I don't want to say a number and then think that people are crazy. Let's say you spend, I don't know, $10,000 a month between your mortgage, your food, your dog, your wife, your pickleball, your golf, your tennis, your fishing. I don't know. So let's say it's $120,000 a month of expenses, and then you also have to have your money be protected with inflation. So maybe you have to add another, let's say, inflation hedge. Let's say you should grow your money at least 3 or 4% above inflation. So based on that, I think people actually need around $1 million,
Mhm.
uh,
Totally agree.
right? Let's say you make 15%, 18%, that's $180,000. So you spend 150,000, and the other, 30, 40,000 is just to keep the purchasing power of the million you started with. And
Yeah,
because
that's not growing your account. That is
no,
just
no,
taking
no.
$1 million and taking all of the gains out. And that's really what 1.5% a month. And 1.5% a month consistently, 18%. I tell it to our members all the time, is 18% will beat the market by almost double every year,
Yeah,
which is not
yeah.
easy. You're
No,
going to beat almost every hedge fund out there, or at least most hedge funds. You're going to beat
correct.
most mutual funds. It's not easy to hit 18% a year. And you have to be consistent, because if you give up that day job and you have a bad month trading,
Right.
well, which kid is not going to eat this month? And
Exactly.
what expense are you're not going to pay the car payment or the house payment, or you're not going to pay your insurance. You're not going to pay for health insurance. And if you're not working and you have to get health insurance on your own, that's a killer for me as well.
Oh
Is
my God.
you got to buy my own health insurance. Yes, I run it through one of my
Your
companies, but
LLCs or S corp or something. Yeah, sure.
yeah, but still, it's a giant expense. And just right now, it's my wife and I, and one of our kids. Our other two kids are a little bit older, and they have their own. And the youngest one is just senior in college. But uh, that's
You
like
know,
you can't have a bad month.
no, no, no. For health insurance, I paid last this year I'm going to pay 46,000 for health insurance. That's crazy. And my
Yeah.
kids are grown, and it's ridiculous. I don't even, in California, we you have to buy the healthcare plan from, provided by the whatever, it's approved by the government, and it's humongous. I mean, the
Mhm.
cost is prohibitive. And you're right. And if we analyze billionaires, most billionaires, or mega, or what they call HNI, high net worth individuals, or ultra high net worth individuals, they always have at least five sources of income. And normally those five sources are a job where they get W-2 money.
Mhm.
Then they probably have interest income based on maybe some bonds or stuff like that. They have dividends. They have capital gains that could come from trading or come from investing. And then they have passive income. Maybe they have rental property, or they create intellectual property like this YouTube channel. So, you know, people who are really, really successful have, those five sources of income. And maybe they take one source of income. In my case, I use my W-2 income to cover my expenses, and the other income that I generate, I put it back into the pot to grow the pile, in order to keep up with inflation, and hopefully a little bit more. But it's a big hurdle that people are having right now with a
Yeah.
huge inflation. It's a lot of pressure now to keep the purchasing power of your hard-earned money.
Yeah, everything's about 50% more expensive than it was, 2, 3 years ago, 4 years ago. So it's tough out there. And one last thing too on trading for a living is
Yep,
one of the things
yep.
I recommend is don't quit your day job and just start trading tomorrow. What I suggest is that you trade for a whole year and put all of the money that you made in that trading. Let's say you need what we just talked about. You need 10 or 15 grand a month. You
Right.
take the $150,000 and you put it into an account, and then next year you quit your day job, and you keep refilling that account, but you always have the previous year's 150 grand so that you can pull out your 10 grand a month out of that account. So you work for, you make next year's salary this year,
Right.
and so that you're not having to worry about, oh boy, I've only made 4 grand this month and the market's down. Now you're going to start putting on trades that you shouldn't be putting on. You're going to be deviating from your plan because now you got to worry about, just put all of that money that you make for a year from trading into just a specific bank account. You can throw it in some CDs or
Sure,
something.
sure.
And then you withdraw from that
Wow.
so that the money's already there. And then this year I'm putting new money into a, kind of a second account or what have you. So you always are earning your monthly income a year in advance.
Wow.
So that you can always be steady. So anyway,
I love that. I'm gonna steal that from you now, because that's a great thing. But and also, if you trade for a year, and what if you don't make that 150,000 trading? Then at least you can see how
right,
talented you are, or
you
how
haven't
lucky
quit your
you got
job.
that year.
Yeah. You haven't quit your job yet, and you still have that, you still have the opportunity to just keep putting another source of income in there. Maybe you have to wait another year until you get better or you get a larger account. But I think that $1 million is a minimum, in
I
my
think that's
opinion. And you see so many things out there that, hey, retire on $250,000 doing the wheel strategy or something. How are you going to do that? I mean, you have to earn 10% a month or something on
yeah.
that money.
It's
It's crazy.
impossible. It's impossible. And you haven't even mentioned taxes.
No.
You know, what if that's 15,000 after tax? So at least you have to make
Exactly.
20, 23, 24,000. Who knows if your expenses are 15,000? So it's crazy. And everybody watching us are very smart traders. Of course, they're they're some are beginners, some are more advanced, but everybody has this dream. And I love how you expressed it, and put some reality into it. Oh, that's great information, Tom. Now let's get into the nitty gritty. What about this market? What the hell is going on, Tom? Inflation is high. Retailers and the consumer is weak. Starbucks is down. Target is down. The consumer is not spending. Interest rates are not going down, and the market's just ripping up. What is your take?
Yeah, and credit cards are maxed, and people are big. There's a credit crisis coming some point. I mean, the government is, they can only print so much. I guess they just keep printing their own money, but they're spending it like, they can keep printing it, which they can apparently, but we can't print our own,
No.
unfortunately. So yeah, it's crazy. The market continues to go up. It's back to a little bit of the whole old Alan Greenspan irrational exuberance days of back in the 90s a little bit. But the market just keeps going up crazy. You got Netflix earnings coming out tonight, and the
And
expectations
Nvidia.
are raised.
And
But if Netflix goes up, the market's going to go crazy up again tomorrow, and you got all these meme
yeah,
stocks going crazy.
and Nvidia too. Forget Netflix and Nvidia, right? So
Sorry, Nvidia is what I meant.
Nvidia,
Yeah,
yeah. Yeah, and it's absolutely crazy. Today we're crashing. SPX is down 1 point,
it is.
1.68.
Yeah, but a 0.03% today. Everybody's probably wondering what happened.
What happened? And this mark. So it took me a long time to realize that my job is not to tell the market what to do, but to execute based on what the market is telling me that it's doing. And that to me was one of the biggest challenges. Being a contrarian, you're used to fading the moves, right? If it goes up, you sell it. If it goes down, you buy it. But that approach has taken a lot of hair out of my hair, and it has taken a lot of life out of me. And what they call MGI, market generated information. I've tried not to fight the market as much as I used to when I was younger and with a fuller head of hair.
And yeah, absolutely. I tell our members all of the time, it's trade what you see. So just trade what you see in front of you. Don't try to guess what's going to happen. I mean, based on everything we just talked about, you would think the market should be down 20% this year, instead of up 12% or so. It's just continuing to move in one direction. But you just trade what you see. I'm a big trend trader for the most part. When I'm trying to pick out different opportunities, and I either do a YouTube video every night, but those YouTube videos are for me as much, and everybody
Right.
else can watch them, but it's just me going through my charts to see, well, what are the opportunities for tomorrow based upon what I see here. And I don't want to fight the trend. I am a reversal trader when it comes to some things. I like to see overbought or oversold
Right.
levels to give me a chance. But for the most part, if the trend is up, I'm going to put on 1-1x trades or naked puts or ratio spreads. If the market is kind of stagnant or sitting sideways, I'm going to put on strangles. If the market's falling, maybe back to 1-1x trades a little bit, or some kind of a call credit spread or something along those lines. But
Do you
whatever I
ever
see, I'm
go
not going to fight.
naked long? Do you ever go naked long on something like ES futures, or make a long synthetic on SPX or something? Do you ever do that?
I have a hard time. In fact, I was trying this. It's funny. I have a hard time just not selling things. And when I do a video and I'm doing a members trading thing and I'm showing them how to buy a put for a hedge,
Yeah.
and I always sell the put by accident. I don't even know how to click on the buy side, when I'm trying to trade. So it's hard for me to do that. It's hard to click on the ask. I only can click on the bid. My
The
mouse
bid.
only goes to the bid, not the ask. So it's hard for me.
That's why you're successful. That's why you're successful. But in low volatility, for me, it's harder because we get lower credits, or our short strikes for the 1-1x's, like you say, are much closer than it makes us comfortable. Especially with VIX at 12, 11, 12. Sometimes we have hundreds of points away from at the money. Now, if we want to put on the same trade for the same credit, it's much tighter, right? And maybe the credit is not as juicy. So how do you fight that mental part of it? Do you keep doing the same size, or do you reduce the size based on the VIX? I'm curious because I want you to help me too as a trader, because I have a hard time adding my regular size when VIX is so low. That's me.
So I'm probably a little different than many people, and but volatility is great. But I don't change my sizing based on the VIX. I don't change my buying power usage based on the VIX, and I don't base my trading based on IVR or
Oh,
IV, because if I
okay.
did, I would have no trades on.
That's
And
that's what that's
I
like
would
me right now. I'm very light. Yeah.
I would starve to death. So I still have to make money. But to be honest with you, I would rather be trading in a low volatility environment where the markets are just kind of moving sideways than than a VIX at 30. Okay, a VIX at 30s would scare the jabbers out of me if I was trying to put a trade on in a high volatility environment. And usually, for me, I like that lower to middle volatility. I'm not scanning for something that's over a 30 IV or something like that. I got to put trades on. I'm just looking for the best setup, uh, that I can. And if I only waited for low volatility, I'd starve to death. I would
Yeah.
not find anything to trade. And I like the fact that things don't really move, crazy. Every now and then you'll get bit with a volatility spike,
Sure.
like we did on gold or copper or a few of those things in March of last year and March again of this year. But they spiked up and the volatility went up, not on a sell-off. But typically, I've been pretty consistent. Just I don't mind low volatility. I just stay consistent with my trades. But I'll find different setups. Like I said, it's either a 1-1x style trade, 1-1-2,
Yep.
1-1-1, 1-1 whatever,
Yep.
or it's naked puts or ratio spreads on anything that's going like this. If it's
Do you
a little
do
bit
a
more
correlation?
volatility,
Do you do?
strangled, then
Mm-hmm.
so you just pick the strategy that fits the setup that you see in front of you. And if I don't see a setup in gold, I don't trade gold. I just
Right.
look for something else that has a good setup for me.
Have you been hurt in your strangles with this huge up move on the call side?
No, but I have only had one ES strangle on all year, and I just put that on not too long ago. I think, let me see if I can even find it here. But one strangle, it's been on for 22 days. That's it. So I've only traded ES on strangles once this year because it doesn't fit my setup. So most of my strangles have been in bonds,
Right.
oil, and then Forex, like the Aussie, the Aussie dollar
Right.
and the euro. I like to strangle those things. When I see the setup, I don't care what the underlying is. If the setup is there, that's where I'll put it. So
Yeah.
I haven't been hurt at all on the ES move because ES has not been a good setup for strangles for me
No.
for the
Right.
whole year. I have one strangle on right now. It's down a couple $100, and that's it.
I had some short puts on SPX, and they started to get challenged, and I did the dumb thing, so I sold a call, pretty far of the money to protect my short put, and then we got this move, and now I became a long-term investor in short. Uncle Tony's rule is never sell a naked call. So it wasn't naked when I sold it. Now it's naked. But
I don't do that. Just no naked calls. I did it. I did it once this year so far, and what I did was on the year, I traded a 112 trade in oil.
Yep.
So I put the put side on, but I also built the call side at the same time because it was a few weeks later because it was overbought on the RSI. So I sold a call side 112, and that's been paying off great because oil's been going down. So it has to be overbought for me to consider it. And sometimes I will take like a 112 trade. And if in the first 30 days, it's a 120-day trade for me, but if in the first 30 days the market goes up 5, 6, 7% and RSI becomes overbought, what I'll do is I will actually sell some calls at the same delta as my puts are at that time. And it basically turns into a strangle with a put debit spread in the middle. But I'll manage those calls separately. But yeah, I don't like selling calls. I just avoid it.
So I have two 120 to the call side. Let me tell you, they're very sad. I'm gonna come clean. So I bought the June 51.75, 52.50, and when I did it, the 51.75 was out of the money, the long call. So the break even for that trade is 53.25, which is right where we are. I sold it for $21. It's $60 right now. Okay, so I'm losing. What am I losing? $3,700 on each unit. And the second one, because I'm an idiot, I did the 52.75, which is higher than the 52.50 from the previous one. And then I went to 53.50, and my break even on that, it's 54.25, and I sold that for $14, and now it's $8. So I'm making $500 on that and losing $4,000 on the other one. And so those are my two 120. That trade has been my number one trade this year. I haven't had any losers on the call. I don't recommend people do that on the call side, but it has been. Last year was my most profitable trade. This year has been my most profitable trade. If we stay here, even the first one that I did, the first loser, is going to break even, and the second one is already making money. But I'm uncomfortable having those naked calls sitting up there, especially with Nvidia reporting, and the market could rip hugely higher. So
I just don't know what, besides Nvidia though, I don't know what other catalysts are around right now to push us a lot higher, except just market drift or something. But if the Fed decides to come out and start cutting rates or something, I think that could push it. But I don't see that happening with the inflation numbers and stuff that are out there. I don't see that till the fourth quarter, or so of this year if they do it at all. So I don't know what the catalyst is. Just would be good earnings and somebody like an Nvidia coming out. But you're either at right now. You're back to on the ES. Here it's bullish on the weekly. We're back potentially putting in a double top though. So right now, you're either going to break out of this resistance level and we're going to rocket higher, and Nvidia would be the catalyst for that. Or if Nvidia, Nvidia's going to beat earnings. If the question is, but
there's no question. Right.
The question is, how badly and what do they say, and is it enough for the outsized expectations that everybody thinks that this is the greatest company on planet Earth, and eventually it's going to be the one like Terminator that takes over the world, and we all lose to robots or something. But
But yeah,
I think if this thing tips over, the double top could be there, and maybe we get a pullback. But for right
and
now, market's in good shape.
if I was the CEO of Nvidia, I don't want to put on a huge beat because that would put a lot of pressure on the company. That's my point of view. I would try to have like I would have to have a good quarter, but not a crazy quarter, and save some bullets for the future because the stock is crazy. You and I have been trading so long. You remember Qualcomm in the crazy days. You remember Cisco Systems. You remember America Online. I mean, they were putting on great numbers. And then the most recent for the young guys, Tesla and Apple. And look at Apple now. It's losing, reduced sales, reduced profits, and the stock market still refuses to. I mean, the stocks refuse to go down.
Apple's going crazy right now. I mean,
Yeah.
Apple's run from 165 to 192 in
Yep.
about 6 weeks or something. I mean,
It's
Apple's
crazy.
parabolic, gapping up on the earnings, and so.
But on bad earnings, they're losing market share on the iPhone. They're losing sales. I mean, I don't. I mean, this is just a frenzy. And Nvidia might be a great company, but I don't think they're going to rule the world. And you know, the capitalism has a great way of neutralizing. If they see someone making a lot of money somewhere, what's going to happen? A lot of people are going into that space, right? Look at ChatGPT. Now, Facebook came out with a Llama thing, which is an open source for free. So that's going to put a lot of AI startups out of business because if someone's giving away the milk for free, who's going to pay for the milk? So I'm worried about
Google
Nvidia's
got it, and
future.
I think Google could be a big player in the AI world. They have all the data.
Of
They have
course.
all of the data. They just have to have a good interface on that, and that looks like a decent product. And I don't think AMD. I think AMD is the poor man's Nvidia, right now. So
Yeah.
if you like Nvidia but you don't want to pay, $900 a share, AMD is right there as a good company.
Right. It's like you don't want to pay for the Pro V1, then you go for the the Tour Soft.
Exactly.
Well, a few bucks lower. Oh my God.
Yeah, I'm only gonna lose 5 to 7 yards of distance on it. I can give up.
Oh my God. Hey, let's take a look at the expected move for Nvidia today. Oh my God, what is it right now? Oh God, it's wow. The at the money is $75.
Yep. Yeah, 75, $76 is the
Wow.
expected move
Do
today.
you
Down 4 points here. So yeah.
would you buy or sell the straddle? I know you don't buy anything, but
I'm afraid to sell these, strangles or anything on them. Maybe buying, but it's so expensive to buy the thing. But I would think buying the straddle would be the one way or the other. This thing's going to move today. So.
oh my God. Oh my God. I think it might move more than the expected move myself.
Very possible. Could be $100 mover.
Do you remember old tasty friend Bobby Lee? He was a great friend of Tom Sosnoff, great friend of mine. He was one of the smartest traders, and so this is he was unbelievable making money. But he was a premium seller like you and me. But for earnings, he had this strategy. So he would price out a regular iron condor, right? And let's say you want to collect. A third or 25% of the width of the strikes, and then what he would do in these crazy stocks, instead of selling it, he would buy the iron condor. And you know how these stocks move crazy a lot of the time. In the morning, let's say you're wrong, there's so much volatility in the first 3 or 4 minutes, you could probably get out of it with a very small loss and maybe make a little bit of money. Or if it really moved out of the expected range, then you would collect a lot of money on one side. But of course, that's not the way we trade. But that's like if you want to have fun, you put in, instead of selling the iron condor, you buy the iron condor, and then see what happens. But you have to be quick on the
You have to
next
be
morning
quick,
to.
and you got to pick high volatility names.
Yes,
That
yes.
really.
Nvidia is it's one of those players. And you're right. I'm not gonna play Nvidia. I'm too old to I don't want that excitement in my life today in the afternoon. I'd rather be hitting some golf balls or something, playing some pickleball
Yeah.
than stressing that my 1100 call on Nvidia is now $200 out in the morning.
I will be on the first tee today when Nvidia announces earnings, so it won't matter to me one bit.
That's great.
As long as I hit it straight, I'll be good.
So what? Now, for everybody watching us, I think they want to know, what opportunities do you see and in the market right now? Is there a certain sector, or is there a certain underlying or market condition that is piquing your interest?
Yeah, for me, I trade mostly futures, so it's
Yep.
options on futures. And the big four for me would be, ES,
Yep.
CL, oil, ZB for bonds, or
Right.
ZN if you
Yep.
prefer, and gold, GC.
Yep.
But I'll also look at a couple others out there. But I mean, right now, oil's been pulling back significantly after all the Middle East stuff kind of calmed down, and oil's been pulling back, even though we're heading into like the summer vacation driving season.
Right.
We're a little bearish there, but I think oil sets itself up nicely for strangles in here. So I'm looking at oil strangles. I think bonds. Bonds have been. I mean, oil is now my number one position. I actually have more trades, buying power being used when I look at my allocation on Tasty, which I do love that feature on Tasty Works. When you go to allocation, you can kind of see how your buying power is.
Yeah, it's pretty cool.
But oil is my number one. ES
Okay.
is number two. And then bonds have been probably number one to number two or number three interchangeably. I just actually closed some trades on bonds, but I like bonds here for strangles, naked. I've been writing naked puts. I think longer term this year, bonds are only going to go up at some point. Okay, and I think every time bonds get a little bit of a pullback, I want to be long. So I've been doing naked puts on bonds. I've been doing strangles on bonds. I have so far this year on strangles, I'm 26 out of 28.
Oh my God,
So,
that's great.
I've won 26 out of 28 strangles, which is not too bad.
Oh my God, wow, it's incredible. Wow.
93%. And I'm just sticking to I'm only putting them on where I see them, where they set up for me. If I lose, I lose.
And what deltas do you choose for your, let's say, for your bond strangles? What are you choosing?
I'm a little farther out. Now, it's not the Tasty trade way necessarily,
Right,
but I'm out about 90 DTE.
Okay.
I go longer because I still get really good decay at 90.
Of course, yeah, you do.
About 7 delta on the puts, about 6 delta on the calls.
Oh, so very conservative. Very conservative.
Yeah, real conservative. And my average days in trade is around 29, 30. So I'm out of almost all of these trades at 50% in 30 days.
50. Oh, you still go for 50 even though you trade the 90 days.
Yeah, I still go for 50. It takes me 30 days. I layer these on in a variety of different underlyings, so I'm not all concentrated in one. And I'm looking for a stock where primarily the weekly chart is more important to me at 90 days than something here at 45 days. Then it would be the daily chart. But at the weekly chart, I want to see us as close to the 21 EMA as possible.
Yep.
In RSI sitting around that 50 mark, give or take 10 either side of that. And that's worked pretty well. That's why I've stayed out of ES, because ES has been above that 70 RSI. It's been well above the 21.
Yep.
I'm not going to fight the trend. I like something when it pulls back or it's just kind of a little bit flat. Gives me the best chance. So I like bonds. I've stayed out of gold. I mean, one of my losses was in gold. When gold just rocketed. Gold and copper. I lost one strangle on each. Those are my two losses back in March when.
Oh, copper. Oh my God. I have so many friends in the house of pain on copper. Oh my God. The copper move is ridiculous.
And I don't, and people are like, oh, don't you want to just sell puts here? I'm like, no, because it's that thing could reverse tomorrow, and now you're going to be in pain on the downside.
Exactly.
It's so overbought. I don't want to get long by selling short. I don't want to get
Right.
long on something that's way over
Parabolic.
the pre-ATR, RSI over 80. I mean, crazy move on copper, but I think copper is going to continue.
Yeah, me too.
I just want to go back to get back in.
If you ask me, I think inflation is higher than people think. These last CPIs, they swapped out a lot of things because I really like to go deep in the weeds. I'm that type of person. I think CPI is the numbers are manipulated. They're fake. When something goes up a lot, they substitute. They're allowed to substitute for similarities, so they always pick whatever didn't go up that much to show the most benign number. So I think we're higher for longer on the bonds. And I do think TLTs ultimately and ZB are ultimately going to go higher, but I don't think yet. Maybe
No, I don't think yet. But what I'd like is the fact that I don't think they're going a whole lot lower.
Oh, that's for sure. That's for sure.
Which is why I've just been selling naked puts and strangles or 112 or trades, 111 trades on bonds. It's my favorite underlying because I think there's a floor there with last year's low. So I don't think we're going to be below that 107 area. And I've been selling the 106, 107, 105s or something along those lines. And I think strangles on bonds is a beautiful trade right now.
And when a strangle goes against you, Tom, do you move up the untested side to protect it, or how?
I'm a simpleton, so I just stop out.
You
I don't
just
adjust. I don't roll. I take the fact that I was wrong, the market was right, and I don't want to try to prove the market wrong. To me, it's opportunity cost. So I could roll up usually we're going to get tested on the.
Of course, always. You always get tested on the call.
Instead of just rolling up the lower or going inverted and then hang on to it for a month, to me, it's opportunity cost. I'd rather just close out the loser and put on a new trade and make money on the new trade as opposed to just letting that money sit over here waiting and holding on for it to recover. So I'm pretty simple. It's worked really well for me. My win rate's very, very high to begin with because I am far away deltas, but I'm also 90 days away. I get pretty far out because I have those. So no, I don't adjust at all. I just take my loss and move on.
And let's say you sold a strangle for, let's say, $1. What's your stop loss for that $1?
So it's been a 2x stop or a 3x stop, which is a 2x loss.
Right.
And I'm getting closer to moving to 1.5 or 150% loss.
Okay.
And I've done a ton of back testing, and I've been really watching what I'm doing. And even though my win rate's over 90%, so if I lose one, at a 2x loss, you lose one, it wipes out 4.
It's a lot.
Okay, but you still have 5 winners.
Well, of course,
so
yeah.
You're still going to make you're still going to make money. But at 1.5, the win rate doesn't change much. It goes down to like 88% from 90 on my back tests and stuff which is not a huge difference in my win rate because I trade a lot of strangles.
Right.
I mean, one of my, I had 28 strangles already in just a couple months. I'll probably be close to 100 strangles this year. It's probably one of my favorite strategies because the return on margin is just so doggone good on strangles because you're getting both sides and you're using futures. But I'm looking at probably going to modify my strategy to 150% loss or 1.5x loss, which would be a 2.5 stop.
Exactly. That's what I'd ask you. For people playing at home, if you sold it for $1, when it reaches $2.50, you will take it off.
Yep, I'll take it off, and I'll take a little bit of a loss, but I'm still winning. When you're selling 7.6 delta, which is pretty far out of the money.
It is.
You're selling that, your win rate's got to be 90 or so percent, and that's all. Okay. For me, it's positive expectancy. I just want to limit my losses, so I just want to keep putting more on. So I'll just take the loss and move.
That's why you're one of the best traders I've met, and you make money consistently because you're not stubborn. You understand that losing trades is part of trading. It's a business, and every business has expenses, and the losses are the expenses for the trading business, right?
Yeah.
We don't have any business on planet Earth that has no expenses, right? So everything has, in order to generate money, you have to spend money. So I love that you're what you're doing with the, and I agree with you, 2.5 points. In my case, I'm a little bit more stubborn. I want to get back at the market. I adjust, I move up my, the
Right.
untested side, but I'm very disciplined. When I'm break even, I'm gonzo. And then I look at it and I have this humongous extrinsic value sometimes still left. And a lot of my people, my friends who trade like me, like revenge trading a little bit, and they see this humongous extrinsic and they become greedy and say, oh, now that I'm break even, now I'm going to make a ton of money. And then the market reverses and they get killed again. So if you're going to do what I do, my recommendation to the people watching is, if you want to adjust, which is a different style, that's why I like talking to you, because we both have different styles, and we both, are successful trading. But I have that discipline when I hit my break even. So if I'm adjusting to get my money back, not to make money.
Right.
So,
and for me, it depends on how long that takes. So does it take 30 more days? Does it take a couple weeks, or does it take a couple months? How long does it take? To me, it's a little bit of that opportunity cost that, hey, I could put another trade on and maybe not break even, because I would take you would have to put several trades on to break even. But I mean, I bake it into my overall trade plan, and I'm very disciplined, but I'm very structured. I mean, I have a trade plan that I do not deviate from ever. I mean, I trade my plan. It's pretty written, pretty detailed. So I know exactly when I'm entering, when I'm exiting, and how much I'm allocating, what I'm looking for. And then you said consistency. I did a video yesterday, like 3 of the things that I think you needed to be as a great trader. I think consistency might be number 1.
I think so too.
You have to be putting trades on consistently, but you got to stick, you got to keep putting the same type of trade on. I can't put a trade on today for $1 with 3 contracts, and then put a trade on tomorrow at $3 with 3 contracts. I mean, now you can't have them different size. So you have to size everything the same.
Yeah.
Okay. So I'm sized to a max loss of 2% of my net lick.
Okay.
So none of my trades exceed 2% unless it blows past it while I'm sleeping or something.
Right.
Other than that, I'm sized for a 2% max loss. Yeah, if I lose a trade, I lose a trade. I lose 2% of my account. I'll make that back up tomorrow on something new, and I don't have to feel like I'm revenge trading on it. But I think you touched on it. I think it's being consistent out there. It's these people chasing the holy grail and chasing. Well, Uncle Tony's putting on this SPY trade that looks awesome, and then Tom's putting on this 112 trade, or Sweet Bobby's putting on this 111 trade or something over there. Well, Tom Sosnoff is scalping future. What are you going to do? Chase everybody's individual trades?
No.
What fits your style? My style is laid back, sit on the beach, sit on a boat, go play golf style. Okay. But if you want to sit and scalp all day long, and fine, what's your style? Number 1. But first is, what's your goal? How much money do you want to make a year? Is it 1%, 2% a month, 3% a month? And then how does that mesh with your risk tolerance? Well, I'm going to retire in 3 years. Well, then your risk tolerance, you can't be going for 3% a month, and you're going to retire in 3. Otherwise, you're taking too much risk. You're going to have to bring your goals down so that it matches your risk. And then what's your style? And then be consistent.
I'm more conservative. My goal is 1.5% a month, and I'm more conservative. And I love the amount of, I don't, you get it, because you do a lot more videos than I do, and sometimes when I'm doing a video, people can see some of my positions, especially on Tasty. They can see what I've sold if I show the trade page, and then I get these comments. Hey, you said you don't do that, and I saw this, but they're looking at some little thing in my on the options chain, but they don't really know what I have on. They don't know my deltas. They don't know my theta. They don't know why I put that trade on and how it fits into my overall strategy or my overall risk tolerance. Sometimes I put trades on that I would never put on by themselves, but I put them on because it fits the way, the shape I want my P&L graph to look.
Mhm.
To me, it's like painting. Even though
Yeah.
I paint like a caveman. If you see my paintings, I paint like a 5-year-old. But to me, I call it the circus tent, or the profit thing. I
Yeah.
see it as a painting, and I try to create this painting that I enjoy. And sometimes I put trades on to it's like adding some color in one side of the painting to make it prettier. And sometimes people misconstrued that, and you see how I used a fancy word, and
Yep.
and that they think, hey Tony, that's why are you doing this? And they really don't know what the hell I'm doing. And for me to I think your monthly goal is 2 or 2.5%, something like that. Like,
So on my active trading account that I
yeah,
trade in the Income Navigator service, it's 3%.
3%.
However, I have a
Yep.
larger PM account. It's only 1.5%.
So that's
Uh,
more like me. Likes
yeah,
more
and
like
I'm trading a lot of T-bills or and naked SPY leaps. I mean, that's
yeah,
my thing there because I don't really want to lose that larger account and so forth. But in there's difference between investing and trading.
right.
And what are you trading with? Are you trading with your entire retirement fund? Okay, then 1.5% is probably the most you would want to go at with a large account when you're going to retire soon. But if it's your trading account and you're just trading and you're okay with losses, you can be a little bit more aggressive
Of course. Yeah. Yeah.
when you're trading. So, and to me, in all of my IRAs, it's 1.5%. So I'm trading. I'm trying to make 1.5% in my large account, very large account,
Yeah.
and my
Yeah.
IRAs, and in my trading accounts, and my kids. If my kids are trading 20, 30,000 or 40,000 or something like that,
Right.
they're young. They can make the money back up. I have now. They're being more aggressive. They're shooting for 3% a month, and they're risking maybe up to 4% of their net lick per trade, where I'm
Wow.
only at
Yeah.
2%.
Yep.
Okay, it
Yep.
all depends on where you are in life and what the money is that you're trading with. And when your accounts get to a million plus
Right.
out there, you don't need to take exorbitant risks. 1.5%. It's the power of compounding is the most magical thing in all of trading. Okay? It's the power of compounding. I just wish that I was compounding earlier on in my life at a more consistent.
Me too.
We
Me
all wish
too.
we were back in our 22 years old when we got out of college and we were putting $500 a month into
Right.
an
Right.
account and making 20% a year. We'd all be sitting on like 40 million
Yep.
right now.
That
We'd be trying to catch up to you.
and
But for
you and
me,
I are so similar. I think the same way. I'm so proud of my two youngest because I've been preaching the art of compounding with them. So
mm,
my son is 25, almost 26. My daughter's 24. I'm proud of Nicole, who's my middle daughter, and I've shown her account. I hope she doesn't mind on YouTube because people don't believe me. And she makes a normal salary. She's just out of college, and she has $160,000 on her trading account.
that's fantastic.
And that's because she saves a big chunk of her income, but she's also a very consistent trader. She trades those leaps, the spy put leaps. She has a day job, and the power of imagine if you and I at 24 had 150 $60,000. Where would we be now, right? So I pushed them since they were 15, 16 to start putting, instead of all the money that grandpa gave her, instead of put it in Bitcoin, put it in the S&P 5, put it wherever you want, but don't buy another Supreme special edition sneaker. It doesn't make sense. It doesn't
So
make sense at
just
all.
looking at the compound interest calculator, at
Yep.
$150,000, if you in 30 years at just 18% a year, which is 1.5% a month, without
Right.
putting another dime in there, in 30 years, she'd be sitting on $32 million.
And we were both, you and I, working for her.
That's exactly right.
If we're still here.
So that's my thing to my kids is, yeah, the sooner you can get it to 100 or 150, and
Right.
then if you can keep it 1.5%, which is not outrageous,
No, it's not. It's
one and
not.
a half percent consistently every year, it's 18% a year. You're looking at $32 million in 30 years. I don't
And
know that
let's
I got
say,
30 years left, so I don't
no,
know this going to do me any good.
you probably have because you exercise. And my biggest exercise is playing pickleball, and golf is not really. I don't consider exercise riding on a golf
No,
cart, and
it's
I
not.
mean, it is something. It's better
Yeah,
than being in the
we're
computer.
getting outside, and I walk from the cart to the green, and I walk to
Right,
my ball.
right.
Sometimes I walk a lot farther to my ball than I want to.
Exactly, exactly. Oh, we had a lot. I don't know if in your I watched some of the comments, but in my channel when we posted. By the way, everybody, this podcast will be posted on both channels on Tom King and Uncle Tony. So please watch both of them because we both need subscribers, we both need views, and hopefully people like it. We keep doing this. But we had a recurring question. We made a comment on the last podcast that you could leverage investing. I don't know if you saw the comments. Leverage investing in treasuries, and you could leverage so much that you would be making X amount of money. I don't know if you remember
Yeah,
that comment. And people were asking, "Hey, wouldn't you go into margin and then incur margin costs?" Would you be kind enough to go through that
it's a good question. Yeah, it was a
strategy?
little misspeak on my side, but you can, depending on your account, whether it's Reg T or a PM account,
Right,
you can invest in treasuries up to the size of your account,
right,
your cash balance. So if you have a $500,000 account, you can invest up to $500,000. In a Reg T account, they're going to hold 25% of that in margin.
right,
And in a PM account, they're going to hold 7% of that. And if you're trading the actual T bills themselves, I believe they're only holding 1% of that, depending on your broker.
right,
But you can only go up to the maximum to your cash balance size is the most that you can put on. So if you have
right,
a $100,000 account, the most you can buy of T bills is 100,000. But the fact that you're margining at 25% means that, at 5%, technically I am making almost 20% a year on that margin account, not on the total account, but
on the
um,
margin. Yeah,
on the
that's a good
margin portion.
clarification. Could you
But
could you could you put it in like cents and Apple, like we say, and so very uh, make it as clear as possible so people we don't get 200 comments again on the thing.
yeah, so the most you can put in or buy
Yep,
in T bills or bill or whatever the ETF
right,
is your maximum cash balance, whatever that
right.
might be, which is essentially your account size.
Your account size, right?
If
Correct.
you're trading using span margin, though, it's going to reduce your cash balance amount. So now you have to watch because if you put it all in bill, all 100% of your account in bill, you have no room to trade futures, and even one option on futures would uh, put you
Margin.
into an excess there,
Yeah,
and
yeah.
you'll start to get charged interest. So yeah, you can't go over your account size with it, but what you can do is get really good margin or basically free margin, which is why in a PM account
Right, right,
you're not using futures. If you're using SPX or SPY or XSP, and you combine those with T bills, you can really do pretty well with very simple strategies.
wow, that's incredible. Thank you for the
I think I misspoke
clarification.
before. I was really talking about the return on the margin
Right.
and not exceeding the account size.
No, I appreciate it. You saved me like a couple of hours of answering the same question. And it's the beautiful thing is why you need more sources of income is because you need to save up money to reach that PM size. You need
Mhm.
that $200,000 account. There's so much more flexibility. There's so much other stuff you can do when you have a PM account. Of course, trading futures can simulate a PM account in some ways, right? But it's
Right.
not the same. It's not the same, and that's why saving money and putting it away and try to have a little bit of a larger account is so valuable because I get asked, probably you get asked the same. Please tell me, give me a trading plan for a $50,000 account, and to me it's very very hard for me. It's one of the most challenging things is to because I'm used to not even looking at my margin like you put on the trades, you don't even care. And but it's so hard to trade when your account size is smaller, I think.
Right. And in our service, we run a $20,000 account as well as the larger account so we can help those people with those smaller accounts. $10,000. We start at 10, we're at 20. And, uh, you know, it's just a different, you're scaling down. Now you're using MES instead of ES, but futures still gives you, in my opinion, the best opportunity if you're doing some sort of 1-1X or naked
Yeah.
puts or something in MES. And when your account's smaller like that, you've got to take a little bit of additional risk. But also just, what's the easiest way to grow that account? Just keep putting more money into the account.
Right.
So you can keep
Right.
trading it, but don't just think, okay, I'm going to start with 20 grand and I'm going to see if I can work that up to $1 million or so. Well, yeah, it's going to take you a while, but if you keep putting in 200, 300, 500 a month, every single month on top of that as you grow, I mean, that's really what you want, because you want that compounding of the larger amount. And if you're looking at 2% a month, you'll double your account every 3 years.
Right.
And so 2% a month, you double every 3 years. At 3% a month, you double every 2 years.
Right. So you have a $20,000 account, and then you put in $400 a month, and then you make another $400 a month trading. That's going to compound like crazy, right?
Yeah.
So that's a great insight from you, Tom. Yeah, part of your return has to be adding money into the account if you really want to double or triple it.
Right.
It's very hard to just double it with just making 1 or 2% a month.
And what you just said, a $20,000 account, and you put $400 in a month.
Yeah.
And you're earning, let's just say 1.5% a month is your goal. We'll keep it conservative.
Yep.
In 10 years, you're going to be sitting at 250,000.
Which is incredible.
So you just went from 20 grand to 250 by putting in $400 a month and having a conservative return rate, in my opinion, of 1.5% a month on a consistent basis. If you want to get a little bit more aggressive and you want to go to like 2% a month, that 2% a month would take you to over $400,000 in 10 years.
Yeah. Yeah.
And then once you get there, you don't have to keep putting in the 400, but by then in 10 years, I'm hoping you're making more than you make today, and you can up your 400 to 1,000 or 800 and still have your, still maybe you've paid your mortgage off or.
Right. And, going back to consistency, everybody wants to be rich. Everybody wants to make a lot of money trading. But in order to achieve that, all your compounding calculations are based on consistency. Put money in every month. You don't know how many people I know that they do it 1 month, 2 months, and then they forget the third month and they never do it again. It's like going on a diet. You go on a diet for a month, everything's fine, and then you go back to your old stuff. If you really want to make it in life, you have to be consistent. You have to follow through, especially with money. If you want to enjoy the power of compounding, you cannot stop. That's why there's the 1% of people, because it's only 1% of people that have that discipline, that fortitude to keep doing stuff, to keep buying assets. If you just do it 1 or 2 months, it's not going to work.
Right.
It's not going to work.
You got to be consistent. And I mean, maybe there's a month where car broke down and you have to fix it, but get back on the horse, the next month after that, and look for other ways to make income. And, there's a lot of different ways you can make income online and do other things if you're willing to work and do it while you're young. But, enjoy yourself. I mean, for sure. Everybody should enjoy themselves, but I have my kids put X amount goes into maybe the next podcast we do in a couple of weeks. I'll talk a little bit about my philosophy on 401ks.
Oh, I'd love that. I'd love that.
And, you want to put enough in, and, to get matching and all of that, but we'll talk about my philosophy on it. But, I have them having X amount gets put into a separate account every month. Like 10% of their paycheck goes into a different account. It's like a bucket. So if they keep X amount in checking, and then we have X amount goes into savings until savings gets to this level. And then after that, everything goes into this other account, which flows into your trading account every month. And I want to see that you're putting 10% or whatever of your pay into your trading account. Once you've filled your savings and your checking, you're putting it into your trading account every single month and have it automatically deducted or at least move it automatically every single month.
I can't wait for our next podcast. I'm gonna make my kids watch it because it's when your dad tells you something, it's not as powerful as somebody as smart as you. And going back to consistency, the service that you have, I don't have a service like you, but a service like you is like having a dietitian be keeping you on the right track, keeping you disciplined, keeping you consistent. In trading is a very lonely thing, and I think the service you are providing is helping a lot of people stay on track and keep doing the correct things over and over again. And that's why I think everybody should follow you and be part of your group, which is a great.
To help hold you accountable. Somebody's got to hold you accountable. So posting my trades holds me accountable. I can't put crazy stuff out there that's going to get somebody killed
Exactly.
on a trade, otherwise I'm going to hear about it or
Right.
or whatever. So I'm not going to put out crazy stuff. So it holds me accountable that, there's a trade. Maybe I'd want to do it. I'm not going to write that. I'm not going to sell those calls on ES, because if I do and it goes up and somebody gets killed because they put it on, because I'll do it in the right size. Somebody else is going to do it, too big. So, and we have a lot of members. We just ask them to share your trade plan. Okay. And B, they can post their own trades in a member area. And the only reason I'm bringing that up is I encourage them to do that because I want them to, they have to give their why. So why did you put that trade on? What did you see that made you put that trade on to begin with? And B, you're not allowed to post your wins in my service if you didn't post the original trade. Okay. So we don't want a whole bunch of people to say, I just made $100,000 on this trade. Yeah. Well, show me the original trade and your why. So we avoid that kind of that FOMO stuff. But it helps keep you accountable because people are going to start asking you, well, Tony, why did you enter that trade today?
Oh, are you kidding?
We didn't expect that you did this. And
it's
then
so much pressure.
Oh, shoot, I could have done that.
It's so much pressure. I have, I post my trades on Tasty, and every time I post, I say, "Oh my God, I'm gonna get so much money for this thing."
And don't tell Tom trades.
Yeah, my God, DTT, exactly. Oh my God, Tom, it's been this hour went by so fast. It's incredible, and thank you very much, everybody out there, for watching us. If you guys want to grow your pile and make a lot of money, follow Tom King. And why not follow Uncle Tony as well? And Tom, thank you very much for your super valuable time. Like I said, you're one of the nicest and smartest people out there in investing. You're not a lunatic trader. You're very consistent, very conservative, and very smart trader. And I love these conversations. They help me a lot. They bring me back on, put me back on the right side of the tracks. Thank you so much.
Yeah, no, same, Tony. Love chatting with you. We can talk all day.
I know. I know you have a tea time, and everybody out there, remember, you gotta risk it to get the biscuit, baby.